Look at that public account. Almost $4.2 million here today. What a comeback. I mean, this portfolio was $1.2 million 3 years ago today. And now see it at nearly $4.2 million. Very thankful for obviously what we've been able to achieve and all those sorts of things. Congratulations to everybody out there hitting all-time highs. I'm sure a lot of you guys hit all-time highs in your portfolio literally today. So congratulations to all of you guys, for staying focused and staying invested in the market, right? Incredible. 10 people in the private stock group last week, 10 people hit seven figures in their portfolio. So signed up 10 of those trophy boxes today. And then we had another 10 people hit six figures in their portfolio. So obviously it's amazing to see this sort of success. And this is what happens when you go on one of these big bull runs, man. People are reaching six figures, seven figures, eight figures. And then smaller investors are reaching five figures, right? They're climbing from that four-figure number up to five figures. And unbelievable to see the success out there, right? I posted this on X here today. If you ever want to follow me on X, it's always linked in the description area. And it's been kind of going a little, I would call it mini viral on X. It seems like so far. I said the public account's almost $4.2 million right now. If I sell it all right now, put it into a high yield savings account, I'd make $154,000 a year at 3.7%. Now, of course, taxes plays a factor, but for this little game, we're not factoring in taxes, okay? I said, would you be tempted to do it? Keep in mind, every 10% of the portfolio goes up now is $410,000 plus dollars. And so if you think about it, like if we talked about all my portfolios together, I could make multi-$100,000 a year, never worrying about the stock market again. Think about that for a moment. Like that's, to some people, like, dang, that's tempting, right? Palantir stock is still on an absolute tear. Do you remember I did this video less than 2 years ago, buy Palantir stock and don't stop? I did that right here on this channel. It was $20 at that time, right? And I said it was going to 200. Well, the interesting thing about that is when I predicted the stock is going to go up dramatically I thought it was over the next 5 to 10 years. And here today, the stock's already getting close to $200, way faster than I thought, right? Knocking on the door at 200. Here today, it closed at $189. On the 1,000 shares I still have left in the public account of 2,478%. What a life changer of a stock, right? In this video here today, 3 core subjects we're going to get into. First one, why don't I just sell everything, cash out, and become a yield king, right? And just buy treasuries, get 4% on treasuries, and just dip. We'll talk about that. I'm going to explain that. It's a very important subject, actually, because I think a lot of you guys are going to run into this position in the future where you're going to look at your portfolio and you're going to say, dang, I could make $50,000 a year, $100,000 a year, multi-$100,000 a year just being in treasuries or a high yield savings account. Why don't I do that, right? I'm going to walk you through my thought process. This is an extremely important subject we're about to get into. This is life, okay? Second thing we'll get into in this video here today is a position I sold 100% of in the public account here today. We're going to talk about why I went ahead and sold it, and I'm going to show you where I put that money, okay? We'll discuss that in this video here today, and upside, downside, all those sorts of things, risk profiles. Third thing we'll get into in this video is what if this market just keeps going up? We know November and December are usually amazing months for the stock market, right? What if we don't have the pullback that we could have had, right? We got no 2018, and what if this market just keeps rolling on? What do you do in that situation, right? A lot of people are already like, geez, this market's still so high, it reaches new all-time high. What do we do? So we'll get into all that in this video here today. I hope you guys enjoy this one. The only thing I need from you, if you could please just hit that like button for me. That's all I need from you guys. I hope you enjoy me doing these daily videos, kind of keeping you up to date with everything going on in the market, my perspectives, and teaching you a little something out there with each one of these. That's always my goal, right? Not just to inform you on what's going on out there, but also to educate you on, things that I've seen over my 17 years in this market. If you could just smash that like button, that means the world. Additionally, if you want to be subscribed to the channel and see more of my content in the future, make sure you're subscribed here. If you're subscribed, much higher probability YouTube will show my videos. And speaking about subscribe, you guys are all in the first 900,000 subscribers on this channel. We're about to hit 900,000 subscribers likely tonight or tomorrow. So I appreciate each and every one of you, and you guys can all say you were in before 1 million, and you were even in before 900,000, man. Appreciate each and every one of you. Pin comment down there today if you're looking to apply to join my private stock group, private wealth group, get access to 1000xstocks.com, all my course curriculums, get your Steel membership cards mailed to your house, your 1000X, your private group, and then if you become a lifetime member as well, we'll send you your lifetime membership card. Those are brand new. Definitely looking to slow things down next year. We're now up to 2,689 members in the private stock group. Demand has been ridiculous. And so next year, we're making a few changes to slow down the amount of people coming in the private group. One of those being we're going to start to basically, everybody that's going to get in, basically you have to have at least $100,000 net worth. So do keep that in mind. If you're under 100K, you might want to get in there ASAP. And by the way, you might want to get in there ASAP no matter what, because there's other changes coming as well, right? Alrighty, so let's get into this. Why don't I sell everything and become a yield king? Very important subject, okay? Listen. When I was in middle school and high school, I loved to play a game called Madden, okay? This was a football game, and I loved to play this game so much. Oh my gosh. And for me, when I played this game, it was not just good enough I would do like what's called a franchise mode. And it was not just good enough to like, oh, I'm going to win the Super Bowl. I started making all these other things where I was like, let me see if I can go undefeated. Let me see if I can beat each team by even more points, right? Let me see if I can play on the very hardest mode. Let me see if all of my players can win like MVP and all these different things, right? Let's see if I can break new records. Like it was always like, let me see. And it was so much fun. And I would even go into practice mode and just like, make sure everything was perfected. Like this play is a perfect play, right? When I moved out of my parents' house, I moved to this community right here. It was a 1-bedroom apartment, okay? From there, I moved to Charlotte, North Carolina. This was in Glendale, Arizona. Then I moved to Charlotte, North Carolina, and I moved to this community right here, and I got a 2-bedroom apartment. From there, I moved to this community right here in Henderson, Nevada, where I got a 3-bedroom apartment. From there, I rented this house right here. It was a 2,700 square foot house. From there, I bought my first house. This was in Henderson, nearly 4,000 square foot house. From there, I bought kind of like a vacation home in 2020 in Arizona, right? I rent that house out nowadays. From there, I bought the current house I live in Summerlin, Nevada, right? And that's almost 4,200 square feet. And now I'm building a house overlooking the entire city, right? That we'll be moving into next year. And even though I'm thinking about that house and moving in there next year, I'm also thinking about the next move after that. I'm thinking about the Summit Club, right? Which pricing will come down, in my opinion, over the next few years. And I'll likely buy a place in there in the next 3 to 5 years, right? I'm thinking about a property long-term, maybe in Newport Coast. I'm thinking about a place in Steinway Tower. I would love to have an amazing place in New York City, right? It goes back to the game. It's a game, right? Game of money. For me, I love the game. I love playing this game, right? And stacking the numbers up, building the numbers up. It's very entertaining to me. It's fun. Not everybody would not feel comfortable living this lifestyle. Not everybody wants to live this lifestyle. In respect, like some people, it's like, if they just got to $1 million, they're good. I don't care about playing the game anymore, right? They got to 2 mil, 3 mil. Everybody's got a different thing. For me, I love the game. I love the game of money. This is not stressful to me. It's not stressful for me to worry about, is this market about to crash or about to have a correction? Is the market going to blast higher? It's fun. I love this. This is like I thoroughly enjoy this to the maximum extent possible. So for me to say, let me go sell out of everything to go put it in a savings account, why? I love playing this game. It'd be like me playing a video game in high school or middle school and saying, I don't want to play the game anymore, even though I love this game so much. It's so much fun for me, right? Like, I love the game. This is everything to me. Like, I love this game, right? YouTube. Obviously, been fortunate to have so much success on YouTube. Got 4 silver play buttons. That means I have 4 YouTube channels that have hit 100,000 plus subscribers. And guess what? We just hit the 5th recently. My reaction channel, Jeremy Lefebvre Makes Money. That just became the 5th YouTube channel I've had since I started YouTube in 2016 to now have over 100,000 subscribers. So fortunate. The game, right? It's fun. It's fun. Public count, almost 4.2 million. I'm not even thinking about where the public count's at right now. I'm not even thinking about 5 million. You know what I'm thinking about? I'm thinking about 8 million. I'm trying to position the portfolio right now for the next double up, to get to $8 million, right? And to get through the next mess we have to get through, to then get out to the other side, to then go climb up to 8 million. I'm already thinking about that. I'm not thinking about 5 mil. I'm not thinking about 6 mil. I'm thinking about 7. I'm already thinking about 8 now at this point in time, right? When I'm bored with the game, I'll stop playing the game. And as of right now, I am not bored with the game. I love this game. I love the crashes. I love the corrections. I love the great markets, the bad markets, the kangaroo markets. I love it all. I love it all. So for me to say, once again, some people get stressed out about money. So they're like, dude, if I was in your shoes, I would just sell out and make $250,000, $300,000 a year, risk-free, not have to stress about it. That's fine. This your decision, right? But for me, this is not stressful. This is fun. I love it all, man. Even 2022, as sick as it might sound, when I was getting wrecked left and right, it seemed like every stock I had was going against me. It was still fun in the end. It's part of the process. Like, we're playing a big game here. And, you might say, where's the game go? Long term. I got every house imaginable and I could ever have dreamt in every exclusive community out there, right? And my portfolio says there's a ridiculous number. Where's it all go in the end? It's going to go right back to society. It's going to go to charity. That's always been my goal since I started this game with a few $100 to my name. I always said, in the end, I would love to give it right back. And not give it to my kids, right? Because my kids, you think, and I understand a lot of people want to give back to their kids and they get a $700,000 net worth when they die. They want that to go to their kids. I, completely understand that. But from my perspective, my kids, if they want to make the most money in the world, they're going to be able to make the most money in the world, right? They're going to have all the knowledge from me when it comes to real estate investing, stock market investing, taxes. They'll have every connection they could. If they care about money like that, they could make more money than I ever made and just destroy my numbers. They could make me I'm 35 years old right now. They could make me look like a joke. They could, right? Because they're going to be starting with such a knowledge base that's, something I could never have dreamt of. So if their goal is to create massive businesses and massive investment, they can do that. That's their own thing. And then if they don't care about the money game, then they won't care about inheriting all that money anyways. That would just be a huge stress to them. Get it? Imagine, you don't care about money. That's not something that's important to you at all. And then you got to inherit a massive fortune. That's just a lot of stress on your shoulders. You don't care about money. And now you all of a sudden got all this money. That's stress. Not everybody's about that life, right? So they shouldn't need my money. So at the end of the day, that will go right back to society, right? And hopefully be able to do great things at that time. And what it is, we'll figure it out down the road, right? But that's always been my plan. I'm like, if I'm fortunate enough to live a full life and I want to keep going after this thing, that's what we'll do, So that is what that is, right? And as far as, we can call it medium-term stuff, I'm about to turn 36 here soon. I always thought about starting a hedge fund in my 40s. And so, I say, why don't I just do it right now? I mean, a few things. I want to have a lot more money when I go in and I start my hedge fund. I want to come in with at least, I would say 50 million to 100 million of my own dollars into the hedge fund, big dog money, right? I don't want to come in with 10 million. No. I want to come in with 50 to 100 million dollars to start my hedge fund, right? And I want to just continue to build a lot of equity with people out there. I want to hopefully make a lot of people, a lot of money by teaching them all the stuff I've learned over the past 17 years and hopefully take a lot of people that are 5 figures to their name right now to hopefully 6 figures and 7 figures over the coming years. And a lot of people that are 6 and 7 figures right now to 8 and 9 figures, right? Because then when the other people are done playing the game, I'm sure there's no one in the world they would rather have managing their money when that time comes than the one right in front of you right now, right? And so, but that's a down the road thing, right? It's not something I want to do right now. And when I do it, I'll do it. That will be the moment. And until that, could I make a fortune doing that right now? Yeah, I can make way more money than anything I'm doing right now. But I just don't feel like doing it right now. Right now, I love running 1000X. I love running the private group. I love doing what I'm doing on YouTube. There'll come a day probably when we go that route, but it's not right now, right? So that's why I do what I do. That's the longer term goals. I hope, if you wanted to learn a little something about me and where all the money's going in the end, right? And all the houses and all the stocks and all that stuff, that's where it'll all be going, right? Number 2 thing here. Position I sold 100% of in the public account here today where I put that money. And we'll talk about what to do if this market keeps going up, okay? Alrighty, so I went ahead and I got spooked. I sold out of my Palantir hedge. Took about a little over a $1,500 loss on that one, PLTZ, and sold out of it completely in the public account. I got spooked, man. I haven't felt comfortable with this one the whole time. here's the deal. Okay, Palantir is on a massive revenue growth acceleration phase. Their margins are skyrocketing. Their earnings per share is skyrocketing. Everything, right? Their net income. And the main issue is the revenue continues to skyrocket, right? And it's, at some point this is going to peak and it's going to start to decelerate, right? But the issue is I don't know exactly what quarter that is. It might be in this quarter they're about to report. It might be in the following quarter. It might be in the following quarter. I would say it's likely in the next 2 or 3 quarters, but I don't know exactly what quarter that's going to be, right? When revenue growth peaks and then they start to decelerate. Now, when that deceleration phase comes, Palantir's stock's going to get obliterated, like 50% downside. But I don't know exactly when that is. And there's a potential here that if Palantir comes through with his next quarter numbers, and let's say they do like a mid 50% revenue growth, or dare I say high 50s, ladies and gentlemen, Palantir will see 200 easily. It might see 250. If they came through with a 60% number, because what ends up happening essentially is people start to extrapolate those numbers out. So if Palantir, let's say, grows the next quarter 55%, then people are going to think the next quarter they're going to go 59%, right? And then they're going to start saying, okay, next year numbers need to come up immensely. They're going to do 50% plus revenue growth next year. People are going to say, oh my gosh, a SaaS company growing revenues 50+% with high margins and an EPS that's skyrocketing with a product that's, everybody wants their hands on. They're going to say buy, right? And, the stock will continue to roll up short term if that were to play out, right? So that's what spooked me here. I'm like, what if my timing's not right? And between now and the Palantir crash, whenever that comes, maybe the stock runs to 200, maybe it runs to 250, maybe it runs to 275, right? I don't want to go through that pain. Like, oh my gosh, right? That's going to obliterate, because I'm 2x, that's a 2x leverage against Palantir. You send that stock to 250, then we need so much downside just to get back to break even. So think about that for a moment, right? That's what spooked me in regards to Palantir. Now, Palantir, we know this is a ridiculous valuation. We know this does not make sense, right? The forward P on Palantir's well into the 300s. You send the stock up even higher, it's going to be even further into the 300s, right? But you got to understand we're in a Momo market right now. What's a Momo market? A Momo market is valuations don't matter, momentum matters. That's the market we're in right now, right? For me, I don't care what market we're in. Valuation always matters. But for most traders, investors, they don't care about valuations in a market like this. They care about where's the momentum at. What stocks are moving, we're piling into those. That's what they do, right? So Palantir, it doesn't matter that it trades at a crazy forward P, 2-year forward P, 3-year forward P. At the end of the day, if it's got the momentum and the high growth, people want in it. And so they just continue to funnel in, and that's what we have going on right now in this market, right? Now, where did I put the money? Well, I put the money in TSLZ. I went ahead and finished off my hedge here. So that's a 1% hedge for the portfolio. Portfolio right now is a little under 4.2 mil. It's a $43,000 plus hedge. So we can say it's roughly a 1%. Usually in Q4 of almost every single year, I like to hedge the portfolio, the public count, with a 1 to 3% hedge. Okay, I'm doing a 1%. So I'm done hedging now, basically for a long time in regards to the public account. Okay, now you might say, why Tesla, right? When this is a stock that essentially is kind of like a Palantir in the respect of if the market has momentum, like Tesla will continue to move up. Yeah, that's an issue, right? This market keeps going risk on for the next month or two. I'll be sitting on big losses here. Like when I say big losses, I'm talking 15, 20%, maybe 25% losses in regards to this, right? But I'm very convinced that Tesla sets up much better than Palantir for downside risk when the market does start to move to the downside. The fundamentals are not there for Tesla. The fundamentals are there with Palantir. That's a big difference. Palantir and Tesla both trade at silly valuations, super high forward Ps. Both stocks have crazy momentum when the market's moving up, right? But here's the thing. Tesla doesn't have the fundamentals to back. The revenue growth is embarrassing, and that might go back negative again, especially given that now the tax credits are out, right? The earnings per share is plummeting for the company. It keeps plummeting quarter after quarter. You look at the latest quarter, EPS was down 30+%. And that was on a GAAP basis and non-GAAP basis. Disaster, right? The margins are, awful for the company. So all the fundamentals are really, really bad in regards to Tesla, right? Now they've taken away the tax credits here last month, right? And look at like the search term on Google Trends for Tesla. It's in a massive downtrend now at this point in time. You can't give away these cars. Look at Tesla Model 3 Google's trend. Look where it's headed here. Look at Tesla Model Y Google's trend. Yeah, it got a nice spike up before the tax credits expired, right? And people were like searching, like, maybe I'll buy a Tesla because, they're about to take the $7,500 away. And now ever since that, it's just plummeted in regards to any interest in people like searching Tesla and Model 3, Model Y, those sorts of things, right? Additionally, and that's in the United States. Additionally, in China, by the way, in Europe, let me just say Europe's a complete dumpster fire for Tesla. Like no one wants Tesla in Europe after the stance Elon Musk took and all those sorts of things that we don't need to get into. But yeah, Europeans are like their numbers are so bad in Europe. It's shocking. As far as China goes, their market share continues to decline significantly. They used to have 16% market share of the EV market. Now they're down to about 7%. And that continues to, plummet for the company overall, right? And then in terms of robotaxi, like that's what people are excited about, right? Robotaxi is not going to generate this company any significant revenues or profits for years to go in the future, right? Tesla's barely at the stage where they want to start removing some safety drivers. You know what early stage that is? First, you got to then remove all the safety drivers. Then you got to prove out that your cars can run well and not have a bunch of issues with safety drivers. Because if they do, have issues and there's no safety driver in there, like everybody's going to be posting that all over the place, right? People love to record these rides. That's going to be posted on YouTube and Instagram and TikTok and X. X might try to throttle it because obviously Elon Musk owns that platform, right? So they might try not to show that if it has some bad moments, but it will be seen on other platforms, right? And so that's a whole situation. Like you've got to prove that out. Then you got to start getting approval in more cities around the United States. It's a long process. If you look at Waymo's years ahead of where Tesla's at, right? Waymo, they're only operational in a real way in 5 major cities. They have other markets they're testing right now, but the only markets they're really in are Phoenix, San Francisco, Los Angeles, Austin, and Atlanta, right? And they're testing right now in Miami, Washington, D.C., and supposedly testing in Tokyo as well, which is pretty exciting, right? But that just shows you like how slow a process this is. And so then you got to market, then you got to get everybody aware of it, and then you've got to also undercut competitors, and you got to keep your product great. When I say your product great, I'm not just talking about get somebody from point A to point B safely. I'm talking about you got to undercut price on your competition, right? And you've got to have all your cars be clean, smelling good, like all these annoying things that add up the cost immensely, right? That a lot of the Tesla folks have not factored in yet in regards to that matter. It's a whole big process, right? And it's going to take years to get the company to a place. And the funny part is people are going to find out when Tesla gets there is it's not going to be nearly as profitable as people think, which is going to be rather hilarious. But anyways, that's to play out. And you may say, okay, I'm very confident Tesla's going to eventually go through a bad spell in regards to that stock, right? Remember the saying, markets can remain irrational longer than you can remain solvent. So if you wonder, like, why don't I go like big money, betting against Tesla here, 2x leverage, more than a 1% hedge. Why don't I go 10% hedge? Who's to say they don't just keep buying up the stock, even at ridiculous valuations? Like anybody could pay anything for a stock. You can make an argument that Tesla's a crazy valuation at 150 PE, forward PE, right? So people are willing to pay 300 forward P. Who's to say they're not willing to pay 500? Like, you know what I mean? Like at the end of the day, that's the thing about the market. You never know when the next big roll down is going to happen. And at the end of the day, they just have kept buying up the stock. They look for the momentum. That's got the momentum and they go rolling it, right? So yeah, there'll be a day of reckoning coming for that stock, but it's hard to get your timing perfect. And that's why when I hedge, I go small. And at the end of the day, if that hedge ends up being correct, I'll make a phenomenal return. Like if all of a sudden the market goes down, 10 or 15%, when I say the market, I'm talking the NASDAQ, over the next, let's call it over the next month or two, guess what? I'll cash out with a 50% profit on that, right? Be beautiful. And then flip that into long positions. But, November, December are usually great. Like, who knows? Maybe the market just continues to roll higher and Tesla just trades at even a more ridiculous valuation. Like, you never really know, right? So just something to keep in mind there and why I don't go big on that. I go big on sure things. When Tesla goes down is not a sure thing. I like to bet on sure things, companies that are at very attractive valuations that are going to have great growth in future years. I'm going to make a lot of money on, right? That's when I go big, right? Meta 2022. That's when I go big. Alrighty, next one up here. What if this market just keeps going up, right? Which what people are wondering, like, what do you do? Do you take profits? Do you not take profits? Do you stop buying? What do you do in this environment? Do you start betting against Tesla stock and Palantir? Like, what do you do, right? Okay, so here's kind of my 2 cents in regards to this subject. One, you take profits where returns don't make sense over time. So when you run your projected numbers, and I'll show you in just a moment, how I think about these projected numbers, right? When you run your case on a stock, okay, and you run those numbers, and at the end of the day, the CAGR does not say a very attractive return on your base case, you got to cash. You got to take profits in that stock. As bad as you might not want to, if the return profile does not say a good return, you take some profits. That's just the way it is. And part of the stock market is taking profits. Do keep that in mind, right? Most of the time, as a great long-term investor, you're just buying and holding, buying and holding, buying and holding. Selling doesn't happen that often. And usually, actually, when I sell, it's like a big subject, right? Like, oh, I sold the stock. Like, it's a big subject. Whoa, I buy stocks all the time. How often do I sell? Doesn't happen very often, right? So, but it is part of the game. And there's going to come a moment where every stock you end up selling at some point in time, right? It's just what ends up happening. People were debating today. I was watching CNBC. They were debating Berkshire Hathaway stock is going through a really tough time, right? I called that out years ago. So the day Buffett announces he's going to step down from that company, it's going to have a whole re-rating of that stock. And so even though the market's going completely risk on green, Berkshire Hathaway stock's doing horrible because it's not getting the Buffett premium anymore, right? And I explained that happened to Apple. I explained that happened to even Wynn stock with Steve Wynn. When Steve Wynn got kicked out of Wynn Resorts, had a whole re-rating of that stock. When you got some legend, I mean, if Elon Musk left Tesla tomorrow, stock's down 50% in a month, right? Like, it's as simple as that. When you got a legendary CEO in place, people are willing to pay a crazy premium just because that guy is in place, right? And so Berkshire Hathaway now, Warren Buffett's going to be leaving next year, and people are like, oh, not willing to pay what I used to pay for Berkshire, right? And so keep in mind, imagine if the market was in a downtrending market right now, Berkshire would probably be down 20 or 30% right now, right? Which for a great company like that's kind of crazy. But you got to run your numbers. If the returns don't make sense, you got to cash, right? 2, focus more on value and dividend stocks. When the market starts to get really frothy is just a fancy way of saying the forward P on the S&P 500 starts to get very elevated, which is what we're in right now. Focus more on dividend stocks and value stocks. That's where your best opportunities are, because when you're in a frothy market, people don't care about value stocks. They don't care about dividend stocks. They care about Palantir. They care about Tesla. They care about momentum. Look at stocks like Palantir and Tesla, since those are ones we're talking about in this video. Look at those stocks at the end of 2022. Where was Palantir stock? $7, $8, something like that, right? Where was Tesla stock going into 2023? About $100. No one, Tesla stock was down like 70+%. Palantir stock was down 70+% from where those stocks peaked at in 2021 to where they troughed at the end of 2022 going into 2023. Those stocks were down like 70, 80%. No one wanted those stocks because you know why? The market was going down. The NASDAQ was down 35+%, right? The S&P 500 was down like 25% or so. So no one wanted Tesla. No one wanted Palantir. We're in the completely opposite situation. Everybody and their grandma wants those stocks. They're the momentum, right? But you know what they don't want? Dividend stocks, value stocks. Look at how so many dividend stocks and value stocks have performed since 2020, that end of 2022. A lot have done horrible. A lot of value and dividend stocks I look at are down 20, 30, 40, 50% because no one cares to own those right now. It's not that the companies are suddenly bad. It's just people don't want to own those. They want the momentum, so they funnel their money into the momentum stocks, right? Guess where money starts to funnel once you start to get a downtrending market for any significant amount of time. Significant amount of time meaning 6 to 18 months. Guess what? Money starts to funnel right into the value and dividend stocks, right? So that's where you want to look at when the market starts to get really frothy. So where I'm going to be focusing a lot of my capital, especially if this market keeps going up in November, December, right? Let's say big tech earnings come out. These companies nail it. The market just keeps, climbing. Next thing you know, we got an S&P 500 well over 7,000. At the end of the day, I'll be starting to focus even more on dividend stocks and value stocks, right? Because remember also, when it comes to dividend stocks, those pay you out those dividends when the market's down, and then you're able to funnel that money into long positions of growth stocks. So you don't have to worry about like, oh, I want more capital to invest right now, but I have to sell the stock for that. That's no fun. But if the company's paying you out dividend money, right? You got a bunch of dividend stocks in your portfolio, they're paying you that out regardless. Like if you own great dividend stocks, it doesn't matter if you're going through a recession. It doesn't matter if the stock market's crashing. They keep paying you out those dividends every 3 months. Credits just keep coming into your portfolio, keep coming in, and then you're able to buy great growth stocks with those, probably at cheap valuations, right? Would you not like to buy Palantir at $7? Would you not like to buy Tesla at 100, right? Would you not like to buy Shopify for $25 in 2022, right? What about Netflix at 170 in 2022? Would you like that? If you had that dividend money coming in your portfolios, you were able to buy, right? Next thing up here is if you're a big dog, hedge, right? Big dog meaning you've got many years of experience in the market. You also have massive portfolio. You can hedge. There's a lot of different strategies. I go through those in my private group in some of the curriculums. I think even one video is like 50-minute video just explaining different hedge strategies, but you can buy puts, right? In the money puts, you can buy out of the money puts. You could even make an argument that selling covered calls could be a hedging strategy as well, right? There's a lot of different other put strategies you can do. You can buy like inverse ETFs as well, right? Which is obviously something I did there. But you can also buy like a 2x leverage ETF against an index, right? You can buy call options on an inverse ETF, right? You can buy put options on a leverage ETF that's going on the upside, but you could buy put options. There's so many strategies you can do in regards to hedging, right? But that's really advanced stuff. Like I said, only if you're a big dog with a lot of experience and a lot of money in the market does that really make sense, at least in my personal opinion, right? Obviously, everybody's free to do whatever they want to do. It's just my 2 cents on it, right? So in regards to running numbers and running projections, right? Looking at 1000xstocks.com, this is my Palantir projections. I'm going to show you my bull case, base case, and bear case for Palantir, right? And I'll show you why it's made sense for me to cash Palantir shares like crazy this year, right? So I have them doing 40% on average revenue growth under my bull case assumption, 2026 to 2029. Going to be very difficult to do that, but we ran those numbers. 50% net income growth on average per year, 2026 to 2029, right? 120 to 140 P, net income margins of 42%. If that happens, Palantir still buy, right? Palantir would give me a compounded annual growth rate of around 20% roughly, if this scenario played out. But my bull case is usually only about, I would say, a 10 to 20% probability. My base case is much more realistic. My base case has them growing revenue 40% in 2026. I think that's a realistic number they can hit. 38% in 27, 35% in 28, and 30% in 29. Very strong numbers. Net income growth of 50%, 40%, 38%, 35%. Net income margins of 37% come 2029. 85 to 100 PE if the company's in kind of more of the SaaS space, growing at those sorts of growth rates, right? I don't get a return. If I run my base case, and remember, those are great numbers. Like, how many companies could really put up those numbers that Palantir is going to put up over the next 4 years? Almost no one, right? If I can't get a return over the next 4 years, cash. You got, as hard as it is, you got to cash, because it's going to be a dead money stock for the next several years, unless that very low probability of the bull case plays out, right? What about a bear case for Palantir? That would be 40% revenue growth in 26, down to 35% 27, 30% 28, and 25% 29. Keep in mind, those are still great numbers. Respect, right? 45% net income growth, followed by 40%, 35%, and 30%. 37% net income margins in 2029. How many companies in the world could do 37% net income margins? Not very many. There's like a handful of them, okay? 70 to 80 PE, which is high, but if you got those sorts of growth rates, you could command it. You're getting a negative return. That's why it makes sense to cash Palantir. That's why I've sold the far majority of my shares of Palantir this year, because I've just run the numbers and the numbers say, dude, got to cash. So that's what I do. So you might say, why didn't I sell it all? I got a little 1,000 shares left. Remember, I used to have 5,555 shares of Palantir on the public account, right? And a ton more in other portfolios. At the end of the day, the only reason I'm holding this last 1,000 shares of Palantir is just in case my bull case plays out. In that, let's call it 10 to 15% probability plays out. I want to have a little skin in the game, just in case, because amazing companies sometimes do amazing things, and that would be pretty shocking. If this company could average 40% revenue growth 2026 through 2029 per year and 50% income, that'd be a historic run. Historic. Maybe they pulled off. And so that's why I'm like, let me just keep a teeny bit in it. So that's why I still have 1,000 shares on the public account, right? And I still have it as a position in the Patreon portfolio. But for the most part, it makes sense to be cash and shares, because the 2026 through 2029 does not set up well for Palantir stock. It just does not, man. it's rough in regards to that, right? So sometimes you got to make tough decisions. That is what it is. Remember, folks, build a portfolio you're going to be proud of years from now, not just proud of for the next 2 months, the next year and a half or something like that. Build a portfolio that you're going to look at 3 years from now, 5 years from now, 7 years from now, and be very proud of. Stay focused on long term. This incredible wealth building opportunity out there, and we got to continue to capture that, right? Pin and comment down there here today if you're looking to apply to join Private Stock Group, Private Wealth Group. Especially, you need to get in there ASAP if you have under $100,000 net worth, because you will not be allowed in starting next year. So keep in mind, what do you get access to? All my course curriculums, every single one of them. My private Discord chat. You get access to 1000xstocks.com. You get access to see the moves I'm making, my $4 million plus Fidelity account. I made other moves in that portfolio here today, right? You get to track all that as well. Get to learn from me and how I run a big dog portfolio and all that good stuff. Much love and have a great day.